Hello everyone, welcome to the Ichimoku daily analysis for gold for Tuesday, July the 7th. Well, a bullish candle today, a green candle, which means that the bulls have made some net progress. A shadow on the top and the bottom of the candle, which is not what we want to see if we want the market to be bullish. This means that there was a downside price rejection and upside price rejection in this market. The size of the body has reduced quite drastically compared to the recent body, so quite a severe contraction in the body, and that really says something about this small first time frame downtrend that the market was in, combined with the fact that the candle was green and also that the low of the current candle couldn't be taken out. It means that the market is finding some support here, and as we can see, the support is at the bottom of the Kumo. We know that the Kumo, or the cloud, will act as an area of support or resistance. So it's acting as support here. There was buying coming in as the market tried to trade up. Unfortunately, though, there was selling also as the market traded up to around these levels, and the high of the previous candle couldn't be taken out. So we couldn't establish a new first time frame uptrend. So we have to doubt how strong the bulls are to push the market higher. But we also know that the bears have lost a lot of power that they had. Now, just looking at with the trend again, we have a bar or a candle with a lower high and a higher low, and in bar chart terms, that is an inside day. An inside day means indecision in the market. It means that the bulls weren't strong enough to take out the high, the bears weren't strong enough to take out the low, so it means that the previous conditions that the market was in have changed. So we need to look at the low here, becomes important for the market, coincides with the area of the cloud or the Kumo, and if we have a downside break here, then it's quite important for the market. That low there is roughly at about 920. If the market does continue to trade down, remember that we are still in a first time frame downtrend. The trend has not changed. The previous trend is still in force unless we have evidence otherwise. So we are still in a first time frame downtrend. So if we do trade down through here below the cloud, it will be quite important for the market, because it will mean that we've gone from a neutral trading environment where we were trading within the cloud to a negative trading environment from trading below the cloud. But we should look to this swing low here, roughly about 913, to hold up as support, and then following that we have previous support down around 880, so a fair way away from where the market's trading. So there could be a decisive break in the market if we trade down below that important swing low. Now, looking at our higher time frame trend, we have a series of lower peaks and lower troughs, which means that the market is trending down. And here we still had a series of lower peaks and lower troughs. We didn't have higher peaks and higher troughs. So the second time frame downtrend is still in force. So the likelihood will be for the market to continue selling off. But we need to remember that the cloud can be a very strong area of support or resistance. So overall, if the market does trade off, we have support down around this level. If the market does trade up, we need to look at then within the cloud, the top of the cloud, to act as resistance, and also we've identified this area here as being a very strong zone of resistance too.